video clip, and it's Saturday the 24th of March, and we'll start with this chart of the Dow going back to the peak around 26,000, and this clear triangle which has been quite interesting during the week. That's upper parameter and the lower parameter. Okay, to about there. So you see we saw the break, we saw the retest I was warning people about, and then we've gone straight down. Now the Dow is actually the more confused market of the ones we look at. In a sense, we've got an A, B, C down to there. Right, we then have an A, B, C up to here, which is the B wave of the triangle, C wave, D wave, E wave. So a classic triangle formation. We then saw the breakout to the downside, I say the retest there. And it looks like we've now got a C wave coming in, looking at the larger sort of wave count, an A and a B to there, and then a 1, 2, and this is a third wave down now, around the third of the third. Effectively fairly fast action coming into next week. There are alternative counts. There's basically a count that we're going to see a substantial fall next week. 3 weeks ago I said that market crash is a question of when, not if. At that point, I had said the odds of 25% of a crash. I need to define our terms there. I'm talking about a sustained market fall, probably over a number of years, with a fall in excess of 30%. That's quite. If we get away with 30% on this occasion, I think we've done extremely well. I expected something bigger than that, but not immediately over a period of time. The big rule in this kind of situation is capital preservation. What you don't do is risk your capital. This is why I'm so against things like selling really deep out of the money puts, for example, because a crash can catch you out quite badly. I mean, in '87, we had a 30% fall on the Dow in one day, as I recall. That kind of stuff is not to be played with for a percent or two income. It's just nonsense. In my view, the thing to do is just to shelve that kind of system at the moment, because I think it's just too dangerous. Obviously, every trader has to make his own decisions, and then take the risk and reward that position offers. You need to analyze the risk and reward what you're doing very carefully. But there are times when it's best to say, here, right now it's not worth the risk, and stay away. And I think this is one of those times, whatever happens next. But right now, on the Dow, I would expect the best count here is that we're going to keep on falling, but we are at support. Clearly, that's a key support level. And the Dow is the more complex of the markets I cover at the moment. Looking at the hourly chart, there is some support for the case that the worst of this particular decline is behind us. We've got a 1, a 2, a 3, 4, and a 5. Slight overlap here, I think by 1 point, which is not ideal, but there it is. ABC here, that's a 2 wave. Then a 1, 2, 3, probably to there in fact. As in a 1, 2, 3, 4, 5. So this could be the low of 3, and it may be that there is not too much more to come of this particular move. If so, we'll see a 4 and a 5 to complete this move from here, and another 4 and a 5. So it's not impossible we could hold that low, but even if we do, it should be the first leg down of a major decline. We may get a bit more time to prepare. All right, on the DAX, we have 5 waves down to there. I think that looks like the clearest count now. 1, 2, then a 1 of 3, 2 of 3, now a 1, 2, 1, 2, 3. Triangle here, again on the DAX also, with the break coming in. That looks more worrying. There's not much redemption there. It looks like we're going to go down further on Monday, and possibly, as it's a third of a third, it could be quite a fast move. So, FTSE again, looks like the wave 1 was down to there. ABC2, very subnormal rallies here, especially that C wave there. Then a 1, ABC2, 1, 2, 1, 2, third of a third coming in. Third of a third, it could just keep going. I mean, obviously not forever, but you know, it's hard to predict where it might go because it is the fastest stage of a move, suggesting that next week will not be pleasant. But again, I've been I've been warning you about this some time, so hopefully preservation of capital has been the key thing in traders' minds. It doesn't just apply to the stock market. It's not just stocks, it's property, bonds, most of the conventional assets. As I keep saying, I think gold and the cryptos will be sort of shining light amongst the gloom. But I expect this particular bear market to be one that is more savage than any that I've experienced in my lifetime. And will probably go for most of those listing I would expect. Right, gold seems to have seen a rather messy A, B, C. Very messy here, really. I thought we might go below 1300. Looks like events taken over already with a 1, 2. I think gold will also do very well next week, based on what I've seen so far. I mean, obviously things could change. Maybe some sharp news might come out to create a bottom or something. As I said, with the Dow, certainly the Dow could cater for a low at this point. FTSE and the DAX don't seem quite so. I can't see quite how that would fit into the pattern we've seen so far. But gold certainly looks like it should be going higher next week, and I think these peaks are going to be taken out. Once they do, that would tend to confirm a bull market in gold. All right, silver saw a key low back in July. I count as a wave 1, ABC 2. That's pretty clear. 5-wave advance there, which is another wave 1, followed by an A, B. Very messy C, rather like gold. Not a clean bottom at all. And there are some signs of life. Maybe too late. Well, it depends what happens on Monday, really. But I think that's probably quite a good stop level if you want to be long a silver at the moment. I'm currently still holding lots, well, say lots, certain amount of coins, certain amount of shares, ETFs, etc. on gold, silver markets and shares. But I'd like to spread that as well. So maybe I'll probably be adding gold and silver next week, I suspect. We're turning to Bitcoin. We saw quite a good low last week. There, looks like a 1, a 2, ABC 2, a 3. Again, we had a bit of a triangle. Last week was some quite critical triangles came in with a breakdown here, which should be a 4th wave. But we take out this level here around 8690. That would suggest, and in fact, this is an ABC. I'm going to go lower, so that's a critical level for Bitcoin next week. And this pattern here doesn't look too encouraging. All right, finally, I'll just say that I do run the Big Call service mainly as a guide to the major moves in the marketplace. That's what Big Call is all about. However, I do look for shorter-term opportunities within the big trends. Also, we do sort of run a sort of first aid service. People have real trouble. If you've got some problem to the trade, then I will do my best to at least give you some sort of not advice as such, but help with what you might be able to do in that situation. This has happened a few times. There's no charge for that service as such. I'm not promising to spend a huge amount of time on something, but if I can be of help, then I like to do so. So if next week is challenging to you at all, then feel free to get in touch. Anyway, hope you find that interesting, useful. Back to the report on Tuesday morning for subscribers, and we'll be looking at the trades as we do every day actually in the WhatsApp room going forwards. Have a great week. It's our weekend. Thanks for listening, and bye for now.